Hey people, I welcome you back to Caroline's Online Academy. Through the series of videos, we are understanding accounting for share capital through small concept problems, concept numericals that we have created. And once we are done with this series of concept numericals, we'll be easily be able to solve the 6-mark problem. In the previous video, we understood what securities premium meant and for what purposes it can be used. And we solved the problem with securities premium when the shares were issued at premium. Even in this video, we're going to solve a problem when the shares are issued with premium. But the premium in this question is not going to be collectible in one call itself, one installment itself. Will be what if the premium was collected in more than one installment, and how do we go about accounting for it? And that is what we're going to be looking at now. So let me share the problem with you. We have Niranjan Limited issued 1 lakh shares of rupees 100 each at a premium of 20% payable as follows. Application is 25. Allotment is rupees 30 including premium of rupees 15. And first call is rupees 30 including premium of rupees 5. So the premium amount of 20 rupees, unlike the other previous problem, is collected in two installments here. One along with allotment money and the other along with first call money. Understood? And the company received 1 lakh applications and allotted in full, and they're required to pass the journal entries. Now, how do we go about doing this? It's the same as the earlier problem, my dear children. Whenever the premium is made due, the premium portion would be credited to the securities premium account, which can be utilized for only the purposes enumerated by the Companies Act 2013. Okay, though all the entries are almost same, I'm still going to retype all of these entries so that you can understand it better. So in this question, they have not given the amount for second call. They told it is remaining, so we need to calculate it. The issue price along with premium is 120, and with application we are receiving 25. With allotment we are receiving 30, and with first call we are receiving 30. So what we are left with is 35 rupees. So second call would be 35 rupees. Okay. And as we discussed many times earlier, the first journal entry here is going to be bank account debit to equity share application account. And that would be what, my dear children, the number of applications received, which in this case is 1 lakh, multiplied by the application money per share, which is 25 rupees per share. So that is 25 lakhs. Application money received. The next journal entry would be, we'll have to see if there is any rejection, and if there was any rejection, we'll have to refund the application money received on the rejected applications. However, in this question, we issued 1 lakh shares and we received 1 lakh applications and we have allotted in full, and therefore we have not rejected any applications, so there is no need to refund any application money. So let's look at it now. The next journal entry, when there is no rejection, would be to allot shares. I mean, the event would be to allot shares. That would have two transactions. First would be to transfer the equity share application money to equity share capital account. That will be the entire amount received as we have allotted all the shares, and we only receive the exact amount of application money for the number of shares allotted. That will be shares allotted. And the next transaction would be making the allotment money due. We got to be a little careful when we are making the allotment money due whenever there is securities premium. You see here, along with allotment, we are supposed to get 30 rupees per share, right? Out of the 30 rupees, 15 rupees is premium portion. So the remaining 15 only is the capital portion. Understood, my dear children? So when we make it due, our journal entry will be, as usual, equity share allotment account will be debited with the amount that is being made due. So that will be 30 lakhs. That is 30 into 1 lakh shares. The number of shares allotted into allotment money due per share. And equity share capital account will be credited with the amount made due as capital. Out of the 30 rupees that was made due as allotment money, only 15 rupees has been called up as premium. So the remaining 15 was called up as capital, and therefore that will be 15 into number of shares allotted, which is 15 lakh, and remaining 15 is supposed to be credited to securities premium account. Understood, my dear children? That is the 15 rupees premium collected along with allotment money multiplied by the number of shares allotted, which is 15 lakh. So, allotment money made due. We made due the allotment money. The next thing for us to do would be to make the receive the allotment money paid by the shareholders, and the journal entry is the same as usual. You're receiving money, so bank is debited, and it is against equity share allotment. So equity share allotment account will be credited as that asset is decreasing. You would receive the entire 30 lakhs. Premium being there would not make any difference to the receipt entry. Understood, my dear children? Only when you make due, the premium portion will be credited to securities premium account. Remember that. Allotment money received. And then we got to make the first call due. Unlike the earlier problem, in this problem, both premium is collectible along with first call as well as allotment, right? And therefore, equity share first call account debit. When you're making the first call due, you got to debit equity share first call account. And how much of that is 30 rupees is the first call amount. So that will be rupees 30 per share into 1 lakh shares allotted. So you made 1 lakh 30 lakh due, and equity share capital account will be credited. Will be credited with how much? You're making 30 rupees per share due along with first call, and out of that 5 rupees is premium as given in the question. If you see, share first call is rupees 30 and it includes premium of rupees 5. Am I right, my dear children? And therefore only 25 rupees of that is actually first call money. Understood or not, my dear children? That is capital portion and the first call money. So that will be 25 into 1 lakh, 25 lakhs will be credited to share capital account, and the remaining 5 lakhs will be credited to securities premium account as 5 rupees per share is securities premium. 5 lakh. Equity share first call made due. After we made the first call due, what are we supposed to do, my dear children? We need to receive the first call money, and it doesn't make any difference if we have premium or not when we are passing this journal entry, because we are just receiving money against the amount that we made due in first call. So equity bank account debit to equity share first call account, and that would be what, my dear children, the full 30 lakhs. And then we go ahead and make the second call due after that. Second call does not have any premium portion, and we've already computed that the second call money is 35 rupees per share. So that will be equity share second. The beginning of the video we computed. If you haven't noticed, kindly go back and check. To equity share capital, making the second call due now. It was 35 rupees per share into 1 lakh shares will be 35 lakhs. 35 lakhs. Equity share second call made due. Alright. And now we got to receive the second call money, that will be bank account debit to equity share second call account for the amount that is being received, which in our case is 35 lakhs. Understood, my dear children? That is what we received along with equity share second call. So even if the premium is collectible in more than one call, you just have to calculate the premium portion, and the premium portion, when the call is being, the installment is being made due, the premium portion will be credited to securities premium account, and the remaining amount collected is collected as share capital, and that will be credited to share capital account. And that's it, my dear children. With this, let me just highlight it for you here. Along with equity share first call, we receive 5 rupees per share as premium, and so that will be 5 lakh for 1 lakh shares. So that is credited to securities premium account, and along with allotment money, we had received 15 rupees as premium, and that is 15 lakh for 15 lakh shares that we credited to securities premium. All the other entries remain the same, and it is the same problem, my dear children. So you're not supposed to get scared or anything when you're doing this problem. Very simple, and mostly they don't ask these things also. This is actually building up to that question that they ask, and we need to understand these concepts before we go ahead and solve it. So with that, we have come to the end of this video. We'll meet you with the next concept problem, small numerical. Till then, I wish you all luck. And as is YouTube, please, like, share, subscribe. It helps the algorithm, pushing my video up, and kindly do that for me. And please do share it with your friends. And if you have any doubts or if you have any feedback, do comment, leave it in the comment section below for me to see. Thank you so much. You people take care. Have fun. Bye.